So why do insurance premiums, especially health insurance premiums, why do they go up every single year? We work with a lot of companies, and I talk to a lot of business owners, and a lot of them, these are big businesses, a couple hundred, a couple thousand employees. And it's just, I was at a planning meeting the other day, and they were going over the budget, and they said, we plan for a 10% increase in our health insurance next year, and then they moved on. And it's like, wow, so you're just planning for 10%, and it's just going to grow 10% compounded year over year, which is outpacing even the tremendous inflation that we recently had. And they're like, yeah, that's the way it is. And started thinking about, what are the incentives involved in this process, and why do health insurance premiums keep on going up way more than inflation and way more than really any other category of services or goods consistently. And one of my thoughts is that it has to do with the way that the health insurance system is set up from a incentives and business model perspective. So when the Affordable Care Act came out, insurance companies were capped at how much they can make margin-wise on a percentage basis, anywhere from 15 to 20%, meaning that for every dollar you take in, insurance company can at most make 15 cents on that dollar or 20 cents, depending on the line of business. And I think that's a really bad incentive, because on the surface, it might look good where it's like, okay, great, we're limiting how much health insurance companies can make. So theoretically, if they're limited to how much they can make, then cost should go down, right? That was the logic. However, if you look at the actual incentives, there's a huge incentive then to drive the price of everything up, because the actual now there's an incentive to grow the actual dollar amount. I think percentages are sometimes vanity, because you don't know what the percentages really mean, right? Somebody might say, oh, my business is super profitable. I have 80% margin. And then you realize they're making like $50,000 a year, and 80% margin on that is $40,000. So margin-wise sounds great. Actual dollar amount doesn't sound great. I went to a golf tournament, and it was one of the PGA events, and I saw a lot of the sponsors, a lot of banks, a lot of companies that have low margins, but a lot of dollars go through them. So if you have a $1 billion company with $1 billion in revenue, 10% of $1 billion, still $100 million. So the incentive there is to then grow the billion. Let's grow to 10 billion. That way, at 10% margin, we earn $1 billion. How about let's go to 100 billion in revenue, or in 10 billion? Because ultimately, at the end of the day, it's the number of dollars that comes through that really matter. As long as you have a business that's able to run well and effectively, ultimately, at the end of the day, how much you earn and how much you pocket is how much actual dollars that you take in, not the percentage. So you have a perverse incentive in this case. It's like credit card companies, right? They get the transaction fee, whatever it is, 2%, 3%. And their goal is, I want you to spend as much as possible. Because if we can get you to spend as much as possible, we get that transaction fee, amongst other things. But we get that transaction fee, and we want to grow that transaction fee. And that's similar in healthcare. And insurance companies, because of the cap in margin, now they're acting as essentially payment processors. For a lot of the insurance companies, when they work with especially companies, they're not really providing the insurance. The companies are using them as a payment processor. They're hiring them to get their rates with doctors. They're hiring them for their claims expertise and other services like pharmacy benefit managers, getting prescriptions. And there's a huge markup in kickbacks and that. We won't go through that in this conversation. Another conversation we will. But those are the reasons why companies are experiencing double-digit year over year. I keep on going back to the example where Starbucks spends more on spends more on health insurance than they do on coffee beans. And for most businesses, aside from salary, health insurance is the second largest line item for most companies. So that's becoming a huge issue. It's unsustainable, especially as we're going through a potential shakeup in the economy. A lot of companies are going to have to either cut back on benefits or find other ways of doing business. And I truly believe that this misaligned incentive of percentages is one of the major reasons why there's a huge financial incentive to grow the cost of healthcare across the board.